Market Show live every day, and thumbs up are always appreciated. There he is, all the way from Philadelphia, Dimitri Pargamonic.
Good morning. Good morning, Will. How are you?
Excellent. What do we got on tap for today? Actually, start with the disclaimer.
Yeah, let's start with the disclaimer first. So good morning, everyone. Before we get started, keep in mind Market Chameleon. Will and I are not registered investment advisors. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor or your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer. Then let me take a look here. And what I think we'll do today, Will, I'll quickly go over the pre-market report, maybe take a look at the option order flow sentiment report. It's a relatively new report. We started it when we first published it out there. We did an overview, but I just want to hit on it a couple more times in case we have any questions, or just kind of make sure we go over each of the features on that new report. If you guys have any questions or you're joining us for the first time, you could put them in a live chat. Will's monitoring them on YouTube. He'll read them back to me. If you want to come on and ask your question directly, we also put out a link to Zoom. If you click on that link and come over to Zoom, when you get there, click raise your hand, and then you don't have to turn on your video camera, but you'll be able to ask your question directly and live. So while we're waiting for any questions to pop in, I'll go quickly over the pre-market report, see what's going on in trading in pre-market hours, and then I'll move on to the option order flow sentiment. I'm just going to use SPY as an example today. Sound good, Will?
Perfect.
So this is the pre-market report. These are stocks that are trading in the pre-market hours. We have our most active stocks, our biggest percentage gainers list, our biggest percentage decliners list. I have 52 stocks on the percentage gainers list, 47 on decliners. So right now it looks kind of even, or maybe a little bit slightly biased towards the bullish side at the open. So let's filter out this list and see what's going on in the S&P 500 stocks. And we do that just to take off the lower cap stocks or ETFs, closed-end funds, REITs, leveraged ETFs, to get a sense of what's going on in the S&P 500. So I'm going to use the filters above. Over here, I'm going to drop this down in ETF. This allows me to select one of the ETFs in the drop-down list. I'm going to take SPY. That's the S&P 500 ETF. That filters out this list by the SPY holdings. Okay, so the constituents in SPY. Looking at our biggest percentage gainers list versus decliners, I got 8 on the percentage gainers list, 4 in the decliners. So they're not a huge list, but a little bit more favorable towards the bullish side. And I mean, we did have a huge yesterday downturn in the market, right? I think we opened up higher. It looked in the morning like it was rallying, but we did have some Fed speakers yesterday talking about, and what did they say? Well, they're more hawkish, and that sent the market down.
Yeah, sorry, I was typing in the chat. Yeah, no, it moved the market lower, and it looks like the Fed is really supposedly now really going to try to get in front of the inflation, raise rates faster. So
yeah, and maybe they're signaling to the markets, don't get ahead of yourself, because we're going to be sending rates higher. And I think that one of the Fed speakers this week said that he thinks by the end of the year we might be at 3.5%, which is that's pretty big increase from now till the end of the year. So let's take a look at SPY. Take a look at how the order flow in the options, how that looked like yesterday. If there are no questions here on the on anything in the pre-market, I'm going to move on.
Yep, we can move along.
All right. So SPY, I'm going to type it up here. And if we go down here under options, it's under order sentiment. We did change this menu around a little bit. We put the options chain here. It's a different order if you're used to, the old one, but options chain still remain up top. We put the trade ideas here, order sentiment third, time in sales. We renamed this, used to be just trades, but it's time in sales, strategy, benchmark. So it's all here. We just changed the order of it. And I think the naming of this one. Let's take a look at order sentiment. And this is yesterday's report. We're not open yet today, so we're looking at yesterday's report. But I'm just going to kind of go over what these things mean and take any questions. Okay. So
Perfect.
when we're looking at the option order flow, there's no, when there's a trade that occurs, right? There's a buyer and a seller. So what we're trying to determine is, well, there are two buckets. We're going to separate them two buckets, right? We look at what are the dealers doing versus what do we think the customers or how the order flow is coming into the exchange, right? So the dealers, they're the ones making two-sided markets. They're willing to buy it or sell options around where they think is a fair value. They're not really in there particular to take any type of directional bet. They're usually hedging and balancing out their portfolio by buying and selling, just like, any dealer, like a car dealer would balance his inventory or anybody else. So what we're trying to see is where the pressure is coming from, from people entering into markets, trading against dealers. And there's no simple way. There's no indicator like that on the tape. So it is an interpretation based on, a lot of rules that we have in place. So there, I think it's over 50 rules and a lot of data that we're looking at, including tick data, surrounding data, implied volatilities, a lot of stuff where we try to make that interpretation. And if we think we can, with a high degree of confidence, we do. If we don't, we skip those trades. So not every trade can get tagged. Sometimes, some things just trades where we can't figure it out and it's noisy, we can leave it alone. So having said that, we start monitoring the trades and we're looking at, a bullish trade would be something where we interpret a trade is coming in, entering the market to buy calls or to sell puts, or do verticals, call spread, or vertical put spread. Bearish would be the opposite, selling calls, buying puts, doing verticals, and so forth. So if we think we could make that interpretation with a certain degree of confidence, that's how we tag it. And the way we measure it is we don't do it by volume, because volume can be deceiving, because an option that's a penny could have a lot of volume, right? But an option like an at the money, has a much greater impact on the stock price, because if you're hedging it, right? So a penny option will not move around with the stock price if it's very far away, and at the money will, or in the money. So volume is not enough, and neither is notional value, because notional value, it depends on time premium, how far you go out, how deep in the money it is. So notional value is not enough. So we take the options and we convert them to the delta of the trade. So what was the delta of this trade? And that's what we're accumulating. So we're aggregating what we think are the incoming deltas of the trade. The delta is the price sensitivity of the option to a dollar move in the stock, and it's derived from the option pricing model, and that's what a professional would hedge his initial directional risk, right? So that would be the directional risk of the option for dollar move in the stock. According to the option pricing model, that's how you would hedge it, okay? So we take the bullish deltas, the bearish deltas, and then we look at for imbalances, or they're more bullish or bearish. All right, so that's what this number here is when we look at minus 6.3 million deltas. That was an imbalance, bearish imbalance to the downside, more bearish than bullish, equivalent for 6.3 million deltas, which you could kind of say an equivalent of, that's what the dealers would have had to sell 6.3 million in aggregate to be delta neutral, take off their directional risk. So that's which way the dealers would have been on the opposite side of that, right? So 6.3 million deltas on a negative yesterday. If we just took all the volume and said how much bearish volume versus bullish volume, this is this pie chart. So 52% of the volume coming in was bearish, 48% was bullish. Okay, so obviously it's not all bearish, right? It's not all bullish, but the imbalance was to the bearish side. Here, just to save time, I'm going to skip some of these. This just tells you the total on the day, total bullish delta volume 71 million, total bearish volume 77. So that's why we get this imbalance of negative 6 million. Okay. Over here, we're looking at on average. So whenever there's a trade, an options trade, we capture where was the stock at that time, where would it be hedgeable, right? And then where were these trades established, and we weighted by the delta volume, right? So the bigger the trade, the more weight it got. So on average, the bullish trades in aggregate were established at $443.43. The bearish, $443.45. So very close to each other, but you could see here how far away the stock moved from where that weighted average was. So it landed at the end of the day 438, so well below this 443, where most of the weight. So that to what is signaling that in aggregate, the shorts were sitting on pretty decent profits yesterday, because if you consider the options on average, when they were putting them on, the stock was 443. If you're buying puts there, selling calls, stock moves to 438. Those options should be working out delta wise. Okay. So those are these metrics here. Now, this is how it ended at the end of the day, minus 6.3 million. How did that progress throughout the day? So how did that look like throughout the day? So we could see here, this is the cumulative, right? So this is the cumulative deltas throughout the day. And this chart, it's all red because it looks like right from the get-go, the imbalance was always to the downside, and it just kept growing. So you could see it just kept going. It was getting stronger and stronger. Pressure was building up more and more on balance towards the negative side. If there's positive, you would see green. So see, these are deltas, zero line. If it would have gone positive, you would have seen green. Negative, it's in a red. And if, even from here, if it's in a red, if the imbalance started going towards the positive side, you would start seeing it going closer to zero. So here it was, you could see here there are a few attempts there, but it looks like throughout the day just kept deteriorating basically more and more from the options perspective. Okay, so that's how to read this graph. What about the next breakdown? So we just keep breaking the volume down to get more and more insights. We know negative 6 million is what we tagged it as. What is the breakdown between buying calls, buying puts, selling calls, selling puts? Because you could establish negative deltas different ways, right? So here Here's the net, minus 6.3 million. 42.93 million of the negative delta, see this red, negative, came from buying puts. The next one, 42.3 million positive deltas came from selling puts. So you could see more deltas, negative deltas, buying puts versus selling puts. So if we took the sum of those two, more buyers of negative delta from puts than sellers of positive. Okay. On the call side, selling calls on bounce negative 33.4 million, buying calls 27.9 million positive. So you could see here between the two, more negative deltas from selling calls than buying calls. Okay, so that's where those negative deltas are coming from, or bearish deltas. Vertical put spreads, buying vertical put spreads, 829,000 short deltas, selling vertical put spreads, positive 514,000, buying vertical calls, positive 299, selling vertical calls, negative 230,000. That's where we're getting these nets from, by summing them all up. Okay, so what we're trying to do here, it's not looking for one big trade or one big trader. It's because, there could be one big trader. There's always one big trader trying to do something here or there. What we're looking for is how much the aggregate order flow, the total, if it's overwhelming to one side or the other, right? Because even if you have one big trader, but you have a lot of medium size or a lot of, retail traders going in the opposite direction, they're going to create pressure the other way too, right? So it's really not any one big trade. It's really the aggregate supply and demand going into the market. All right, does that make sense? Well,
yeah, it makes sense.
Okay, so that's what we're looking for, the total imbalance in aggregate. We could also look at what are the top options the traders are using. So in SPY, we could see there are lots of options, probably hundreds of, different strikes on different expirations, calls, puts. So, and these all take them all into account, but let's just look at the top 10 to see if there's like a big concentration. So the top one, yeah.
We had a question. Unfortunately, this is delayed between pop-up from Laurent, and he was asking the minus 6 million net option delta means that those are trades for which the market maker couldn't find the other side and has to hedge himself. That's the question. Is that correct?
Well, it's not exactly, no. So think of it like this. If you're a car dealer, right? You're a car dealer and you're in the business of buying and selling cars, right? You're selling new cars to people, and you might buy their used car, and you're managing inventory, right? And to keep it perfectly balanced, if you could, buy 10 cars and sell 10 cars, you're perfect, you're perfectly balanced out. But if you have people coming in and they're buying your new cars, but nobody's trading in any old cars, or you're having and you're not able to buy as many, cars as you're selling. So there's like an imbalance coming in, right? So not more buyers than sellers. The dealer's managing these deltas and managing their portfolios. But what it's saying is that if you're lining people up, customers, there's more customers lined up to buy than to sell. Okay. And the dealer could hedge these deltas, right? They could go in the market and hedge them. So it's not a big deal for the dealers to hedge these deltas, but kind of think of it this way. If the dealer just did options all day, just bought and sold options, and never hedged anything, they never hedged any of their deltas. At the end of the day, if we took all the dealers, we'd say they're long. They would be on the other side. They would be long 6 million shares of SPY. Now, for them to hedge it, they would just have to sell that 6 million shares in SPY, or they could do it in, the futures, or there are other ways to offset it. But somewhere, if they don't want to hold that delta, they would have to hedge it somewhere. That's kind of what we're saying.
Gotcha. Perfect.
Okay. All right. So over here, we're looking at the top 10, right? So the top 10 deltas, where they're coming from. And the one that popped up is April 22nd. That's expiring today, actually, right? So that's today's expiration. A lot of it came from selling the 45 calls. So probably when the stock was higher, lots of call sellers on that 45 call, that alone was on balance negative 1.1 million. Okay. Next one was actually a positive delta. So from the put 422, 465,000 deltas. So if it's positive deltas on the put, that would have been on balance more sellers, right? So to get bullish deltas, you would be selling. 448 call, you could see 450,000 negative. April 445, 425,000 positive, and so on. So these would be the top 10. So you could see if there's any big concentration on 1, 2, or 3 strikes. Okay, so these are kind of what's pretty well distributed, after this one. All right. So the next thing we're going to look at is who do we think are the market participants, and what are they doing? So we break them down into 4 buckets here. All right, we look at the small retailer, and the small retailer is usually a very small trade without a lot of trades surrounding it. So it would be, what we look at is if it's an options trade that is under $2,000 in notional, like a 1 lot or 2 lot, it's not selling a lot of options. So we have some parameters there. Then we could say, okay, this is most likely a small retail trader, because a big professional institutional trader, they don't trade that way. They're not likely to trade, a 1 lot there and stop, or 1 lot there. So that's more likely a small retail trader. Then we look at retail traders where it's above 2,000, but between 20,000, we have some parameters there. Institutional trade, when we see either a big cluster of trades all in one sequence, or a big block trade of $50,000 notional or more, we consider that more from the institutional side, because not everybody could do that, right? Maybe there are some retail folks that can, but they can't do it that often. And you'd have to even be approved to be able to trade that size anyway, so usually it's an institution. So we do have parameters, and nobody tells you this, but we have to make that in, but we can try to make a good guess or an interpretation. So we track it that way. And this first chart here is looking at the total notional amount that was traded by each of these groups versus what they do on average. So we take the 30-day average, which is in gray, and then we compare it to yesterday's notional value of trades. And yesterday was busy, so you could see these blue lines for each one of these: small retail, professional, institutional. They all cross that gray line. And here, you could see here yesterday, that's the notional value for small retail, above the average, daily average. So it was busy yesterday on all fronts. Okay, maybe the biggest were the institutions and professionals were out here. Then we take a look at, well, if we separate them out, were they bullish or bearish, right? How was the sentiment for small retail compared to large institutions, right? Were they on, did they have different viewpoints, or did they all go in the same direction? And that's this next graph over here. So you can see these red, they're all negative, meaning on no matter which group we look at, as far as trader size, on balance, most all of them were looking, to use the options to sell or sell deltas, all right, short deltas. So that's what these two graphs are. The ones below here, it's doing a similar, but what we did was we broke off the complex order, the vertical spreads, right? So the multi-leg, the spreads, and we took a look how they compare. So this is only single leg, either buy and sell and call, buy and sell and put. Over here, this is looking at vertical spreads. So we decoupled them. And similar situation here, the graphs are basically saying the same thing as the single leg trades.
Hey, D, just to confirm, Rob is asking, are all these completed trades that create the deltas or bids and asks in line to be executed?
Wait, say that again.
When you were talking about the deltas, is that related? That data is pulled from trades that have transacted, right? Not bids and asks.
Yeah, it had to be a trade, right? So there had to be a transaction that occurred. So these are actual trades, actual transaction.
Perfect.
So somebody had to buy a call, and then we take that transaction and analyze it, or somebody sold a call, we take that transaction. So there had to be a trade. Once the trade occurs, that's when it goes through the analysis. Yeah, so this would have created an actual, pressure, right? It should have created actual pressure. Let's look at the next batch. So here we take a distribution of how far away these deltas are from at the money, right? So you could use different strikes, right, to establish deltas. For example, you could buy at the money calls, you could buy out of the money calls, you could buy deep in the money calls. So where are the strikes where most of these deltas were coming from? So what we did was we said at the time of the trade, 0 would be right at the money. And we said, okay, how far percentage away were these strikes, at the time of the trade. So you could see the biggest right here, the biggest deltas came from strikes that were between at the money 0 to 5% above the at the money. Okay, so that's where most of those deltas came from. You could tell there. So when that trade occurred, it was either at the money calls or puts, the trader or the verticals. So or above, but not further than 5% away. So it could be at the money or above, not further than 5% away. So if it was wings, if there's something going on, you would see these 20%, going up. So you could see even on the wings, they're getting short deltas. These are 20% away on each side or more. Okay. This last graph, I'm going to hurry up a little bit because I have a minute left. Here, this is looking at the expiration dates of the options. So, we have different expirations. There's very short dated options, or there's medium dated, long dated options. Where are these deltas coming from? So we see here the biggest bar right now for options that are less than 5 days left to expiration, very short dated options. They're all kind of clustered. The next big one is between 10 and 30 days. So we are seeing some people using a little bit longer date. I wouldn't say longer date, but medium dated options going out as much as 30 days to establish short deltas. Okay. Lastly, here, this is a chart end of day deltas, so these are going back in history and looking end of day, how it is. So yesterday we ended up negative 6.3 million. The days before it was positive, so you could see end of day deltas. And if you come down here, this is a table and it shows you end of day, and then it shows you the lowest and the highest. So yesterday it was always negative, it looks like, but it's looking at every minute. So you could see that it was negative as low as negative 6,000 deltas. It ended up on the worst part, negative, almost on the worst, 6.3 million. All right, so we're after 9:30, Will. I'm going to stop right there.
Well, that was an awesome job, D. You have a great weekend. Thanks for joining us, everyone. Remember to click thumbs up. It's always appreciated. Dima, great job. We will see you on Monday, my friend. Have a great trading day.
Thanks, everyone. Have a great weekend. Stay safe out there and hope to see you guys on Monday.
Trade in peace, chameleons. Have a great weekend and a great trading day. Bye-bye.